What's going on? Welcome back to Trending Stocks. Today we're going to talk to you about SoFi. I want to go over some expectations for this upcoming week, what could cause some volatility in stock price, and go over everything else that you need to know. But first, make sure to hit that thumbs up and subscribe. And with that said, let's get right to it. So SoFi did close at $8.99 on Friday. So as I said over the last couple of videos, SoFi wasn't going to get above $9 unless it was some artificial push up higher, and that didn't actually happen. So this is a very clear indication that there's a lot of manipulation surrounding SoFi, but I don't think that's really new information. But it is very interesting to note as well. I want to talk on what potentially that might mean going into next week. Aside from that though, for data points though, there's only a couple of things coming out this upcoming week that could cause some disruption, and that is more so on Wednesday with ADP non-farm employment. Forecast is about 145,000, and then on Friday you do have the non-farm payroll. Forecast is about 190,000. So both indicators very much linked to consumers. SoFi and consumers go hand in hand. So if this data is very negative, then this is where SoFi could get hit, especially once I go over the technicals. It'll make a little bit more sense. But aside from those 2 points, you're seeing the fear and greed index at 77. So people's appetite for risk has just gone up like crazy, especially more so with cryptocurrency. A lot of those crap coins, they're running up like massive numbers, like return on investment is going crazy up. So in general, that will extend into this upcoming week. So the market will naturally want to propel a lot of stocks higher, such as SoFi. That could really stand to help SoFi overall and get it above some very key resistance levels. And then when it comes down to companies unveiling their earnings, there isn't really anything that is going to disrupt the broader market. There is a couple key players though in certain sectors that I'll be watching, such as NEO, Target, there's also Costco. But again, aside from that, even if all of those and whatever everyone misses, then yes, technically it wouldn't really cause that much of a concern. So once again, let me know your thoughts on that. These types of weeks though, I really do like because it does fall back down onto the technicals. So right now the technicals are looking fairly good for SoFi because it does have a pivot point of $7.88. So for as long as SoFi is above that, then it is anticipated to get between this range, so around the $11 range. Of course, any sign of weakness, this is where you're going to see a pullback, and I'll touch on that in a second. When it comes down to SoFi, there has been no recent news, no SEC filings, and there isn't anything SoFi specific anticipated for this upcoming week. So they're not participating in any conferences, no fireside chats, nothing along those lines. So once again, it will fall back down onto the technicals. Let's go over some data points though. So shorts. So right now, or I guess on Friday, shorts did increase 573,000 shares, 17.34% of the free float is being shorted, 158.26 million shares overall are being shorted, and cost of borrow average is 0.88%. And you can kind of see, so I moved this chart right here. So you do see the SPAC levels and the rollout, and shorts did get in, and it had a high around 21% short interest. So it is having the same similar kind of charting. So I don't know, maybe shorts are starting to really get in because right now 17.5 short interest is very high, especially based on the S&P hitting all-time highs and SoFi's earnings. Like, I get it, maybe the whole rollout from the SPAC, yeah, shorts probably got in because it was overvalued in some aspects and didn't really have the results that they do now. But it's crazy the fact that shorts are getting in. Let me know your thoughts on that in the comments below. Aside from that though, looking at options. So options on Friday, a lot of money was getting in, $6.3 million in calls being purchased versus 1.09 million in puts. And sentiment wise though, somewhat evenly divided. So 45% of all the options being done on Friday were bullish. And of the call options that were being purchased on Friday, there's a consensus for it to be around 950. And then vice versa, looking at puts, you do see a consensus for it to be roughly around between the $8.50 and $9 range. So the risk versus reward is definitely very much in favor of SoFi going higher. So that's kind of a good thing. And as I've been mentioning over the last couple of videos, there's been a couple of things influencing SoFi's stock price, one of which is shorts. Second is options and manipulation through market makers and whatever else. So technically, with it closing at $8.99 on Friday, that does mean that the $9 and above strike prices are going to expire worthless. That's kind of the name of the game, the risks of doing options. So make sure you guys always do your own due diligence. But aside from that though, the 850 and below are going to be exercised, and market makers typically don't have SoFi stock on hand, nor do they have a lot of volatile stocks. So they always have to go to the open market, whether it be pre-market or during the trading day, to buy. In previous occurrences, they do buy as soon as the market does open on Monday, resulting in a nice spike up. It is short-lived, it usually goes back down, but regardless, it does cause a spike. So right now you do have 22,000 in open interest at that 850 strike price. And even though in the past they have waited up until Monday, I do feel that they actually did it Friday after hours. And my reasoning is, normally Friday has very low volume, not just with SoFi, but the broader market. A lot of stocks just have very low volume, unless they're momentum plays or whatever. But 26.3 million shares were traded on Friday, 58.9 is the average. These are some of the transactions that did occur on the secondary market above $100,000. So you do see a lot of abnormal activity after hours. So you see a 10.8, 4.2, and a $1.6 million transaction, aside from many others. Based on the bid, the ask, and the selling price, all of these after hours right here were buys. So someone wanted to get in. We can't see who it is or whatever it was for, but essentially it does indicate that someone was getting in. So maybe it was market makers covering a lot of these options that instead of doing it Monday, they were doing it Friday after hours to avoid some volatility. I'm not really sure, but looking at some of the strike prices and resistance points, I guess, for this upcoming week, $9 has around 17,000, but I don't think that would really deter or at least make that a line in the sand for market makers to restrict SoFi to get above that. So I feel like this upcoming week, it is going to piggyback off the broader market, and that way you can kind of see it's free and clear, assuming it does get over $9. But of course, there's a lot of caveats to that and little asterisks. I'm going to talk all about that because the Elliott wave technicals are pointing to around $11. But looking right here, so I'll just quickly zoom in at, for instance, the 1 minute. So right now you do have it between the pivot and this R1. So $8.98 is a very strong support. And throughout the trading day, it was kind of flirting with that for the most part. And then $9.10 is going to be that next strong resistance. And like I said, this is the 1 minute one. So if we kind of zoom out looking at the the 1 day right here, you can see at 9:20 and then 9:61, there is very strong resistance levels at those stages. So I feel like with the broader market, if it can get over that $9.10 and then $9.20 resistance levels, then this is where it'll be free and clear. But the first sign of weakness, you might see a sell-off and consolidation with SoFi, only because looking at stochastic, you do see a start of a deviation. So red line above the white showing a bearish underlying sentiment, as well as it is at roughly about 87. So that is considered somewhat overbought. So the first sign of weakness, whether it be with SoFi or the broader market, this is where you're going to see a sell-off in SoFi as it consolidates. Which again won't really take away from the Elliott wave technicals, because that will still be bigger picture, and assuming it does stay above that pivot point of 788 or whatever it was, then yeah, it could definitely still hit that $11 range in the short term. But of course, for this upcoming week, this might really hinder it, essentially, if there is some weakness. And it would probably come from those two data points, in my opinion. So the ADP non-farm employment and payroll. And then right now it is above a lot of the key pivotal moving averages, as you can kind of see, and higher percentile of the Bollinger Band. Number of investors, aka retail, haven't been doing all that much over the last little bit, so it has been relatively quiet. But there is one thing I just wanted to play for you, and even though the S&P did hit an all-time high, essentially there is still more room for stocks to run up. So I wanted to quickly play this video in a second, but just to quickly summarize everything that I just mentioned, because I go over a lot of the data points. So SoFi technicals as of right now are looking fairly optimistic, although it does have the opportunity to really trend down again. That's something to consider. And if it does trend down, then you just have to watch and take a mental image of a lot of these support and resistance points. So this S1 right here, 788, is going to be also that Elliott wave technical pivot. So just take a mental note of a lot of these support points. But aside from that though, options are looking somewhat optimistic, very optimistic in fact. And shorts are just, I don't know, shorts are just doing whatever the hell they want. But the fact that they are starting to really get into SoFi isn't typically a good sign. But all in all, I think that SoFi should have a fairly good week. But when it comes to it, like I mentioned, I'm just going to quickly play this, so don't forget to hit that thumbs up and subscribe. And as well, if you have any comments or questions about anything that is said in this video, which I feel is very knowledgeable and provides a lot of utility, then let me know.
Joining us now is Apollo Global Management Chief Economist Thorsten Slok. Thorsten, it's great to have you back on the show. What's amazing is how much Fed speak we got today, and in the midst of it all, you put out a note this week that's been getting a lot of circulation where you're basically saying, guess what, it's going to be higher for longer. Looking at the inflation data, don't expect the Fed to cut rates at all this year. Why is that the thesis?
It's exactly because what you and John just spoke about, namely we're at all-time highs in the stock market. Credit spreads on IG are very tight. Credit spreads on high yield are very tight. Loan spreads are very tight. IG issuance in January was the best January on record. You also saw high yield issuance was strong. You've seen loan issuance being strong. And you're also beginning to see IPO activity begin to pick up and M&A activity begin to pick up. So it is not surprising that this easing in financial conditions created a very strong employment report in January of more than 300,000 jobs created. And now also likewise, we're seeing also a beginning of an uptick in inflation in January. So all that we are pointing out is that this tailwind from easing financial conditions that all began with the Fed meeting on December the 13th when they pivoted from hawkish to dovish. All this is going to lift growth, lift economic activity, and the wealth effect from stocks going up is also going to lift consumer spending. So that's why we expect now that the Fed will probably stay on hold until the end of this year because the tailwind to growth over the next several quarters continues to be so strong.
Okay.
So yeah, that's an interesting viewpoint. Aside from him saying that the interest rates are going to be higher for longer, which I kind of do disagree with, but I do agree with, despite the S&P hitting all-time highs, you're going to see a lot of stocks and growth stocks such as SoFi propelling higher, despite the lack of rate cuts. So let me know your thoughts. Don't forget to hit that thumbs up. Hopefully everyone's having a good weekend. And with that, appreciate all of you watching.